Thursday, July 4th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to apologize to all my Canadian viewers. I didn't realize that July 1st was Canada Day, so happy belated Canada Day for all my Canadian viewers, and happy 4th of July or Independence Day for my American viewers today. Today I'd like to talk about bubbles popping or balloons popping. And I listened to someone the other day on YouTube, and they were talking about the bubble and how balloons pop, and how, you know, when you blow a party balloon, the bigger you blow it, you know, the more likely it is that it will pop, and it pops when you're least expecting it, right? And I think that's what's going on now with the financial market. Am I being a Cassandra? No, I'm just being realistic. You know, the fact that central banks are coming back and cutting rates again, or are gonna cut rates again. I saw the Reserve Bank of Australia cut rates the other day. I see they're gonna nominate, well, they should get her through, Christine Lagarde, and I tweeted the other day that's going to be more easy money from the ECB. I think the ECB or the European bureaucrats were very, how can I say, reluctant to allow Jens Weidmann, who is the head of the Bundesbank, become head of the ECB. As I said earlier, most, you know, the German bankers, central bankers, are usually hard money, sound money men, because you know, their parents and grandparents went through the hyperinflation, so they know what inflating a bubble or a monetary system is all about. The other headline I saw that I thought was comical is that they're thinking of installing George Osborne, who was the Chancellor of the Exchequer here, I think from 2010 to around 2015 or 16 or thereabouts. He was the man who said that the government budget would be balanced by 2015. He said that, projected that in 2010, 2011. And here we are in 2019, running a deficit still, and the deficit is probably going to get bigger as the UK economy is slowing down quite aggressively. We had some PMI numbers a few days ago or last week, I'm not sure when, and it's all the way down to 47, which is way below 50. So the UK economy is not doing well. So yeah, amazing that someone like George Osborne wants to become head of the IMF. I think it's because of the salary that he gets tax-free there. IMF is funded by the taxpayer. It's a government-created institution, which is actually obsolete. It was created out of the Bretton Woods Conference to help maintain the fixed exchange rate of currencies in the system. But in 1973, you know, a couple of years after Nixon closed the gold window, that system collapsed, and we've been on a floating exchange rate system that's sinking to the bottom, as we know. And I saw a tweet by President Trump yesterday that he wants the dollar to start devaluing. He wants to join, you know, as he says, the Chinese and the ECB and the Eurozone in taking the dollar down. So there's only one currency that's going to benefit from that race to the bottom, and it's precious metals, gold and silver. You can't print gold out of thin air, even though you know the bullion banks and the central banks think they can by issuing paper contracts on COMEX and trading naked shorts on the LBMA, right? So yeah, that's where I think we are. We are at a time when, you know, we're blowing that party bubble. It's getting bigger and bigger and bigger, and all of a sudden, out of nowhere, it's just gonna pop and startle everyone. So I actually have to thank Lois Vogel Sharp. I forgot her YouTube channel. Some of you might know her YouTube channel. I've heard of her. She's the one who gave this analogy of the party balloon. So credit where it's due. So yeah, the markets are open this morning. The futures, it's going to be very quiet, and I think it's going to be half day on the futures exchange. On the futures, I don't even like to say exchanges, but on the screen. Because it's 4th of July. Markets will reopen tomorrow in the U.S. and you will get we'll get non-farm payrolls tomorrow, right? But yesterday was another day where a bubble kept blowing, and there are two bubbles, not just the stock market bubble, but the bond bubble as well. Yields collapsed even more yesterday. U.S. Treasury yields. The 10-year is now at 195. So it's not trading today, of course, but it closed yesterday at 195. The 3-month is still at 221. So it's now inverted by 26 basis points. So what you have to understand, some people, ask the question, how can people, lend to governments and have to pay them to lend to them, i.e., how can they buy bonds that are yielding a negative return? Well, it's very simple to explain. The longer term bonds like the 10-year, 7-year, or 5-year, their prices move quite a bit compared to like a 1-month T-bill because they have more duration and they're going to be in the secondary market for longer, so their prices tend to move quite a bit. So if yields are moving lower or collapsing, we know that bond prices move conversely to the yields. So as we've had this drop in yields for the last, I would say, almost 12 months, I think last year we reached 325 in yields, so yields were going up the 10-year, and now it's at 195. That means that prices of those bonds have gone up through the roof. And the lower the yield gets, there's something called convexity, which is like it's like a curve that goes parabolic. So the closer we get to zero on the 10-year or even the 30-year, the convexity is even bigger. The speculators, even investors, they hold on to those bonds because they don't have to hold it for 10 or 30 years. They can hold it for 12 months and make a mint on it, on the price movement. And that's the other bubble. And I think, the stock market bubble, we saw, of course, the stock market yesterday as well go up quite a bit. The Dow was up 180, S&P was up 22 points, NASDAQ was up 61. So up another 3/4, more all-time highs. I think this balloon is getting, bigger and bigger, and we all know what happens when you blow balloons, too much. We've all probably done it, preparing for a birthday party. It goes pop. It startles you. So that's where I see, this market. So what do we do to protect ourselves? Well, being outside of it. Try not to be, it's another analogy would be, the Titanic is going to sink. You get on the lifeboat. And you might be on the lifeboat at sea, and the Titanic's still there, and it looks fine. Everyone's like having a ball, having champagne and dancing with the captain. But that ship is going to sink, and it might feel a bit lonely out there on the lifeboat. But when the Titanic starts sinking, you're going to be very glad you left that ship. So that's where I see things right now. And there are even central bankers who are warning about the bubble or about some kind of investments in this bubble. And it's Mark Carney of the Bank of England. I found an article here on IPE.com. I'll put the link below in the description. It says, funds invested in illiquid assets are built on a lie, says Mark Carney. So that's not me saying that. That's the governor of the Bank of England, former Goldman Sachs, executive, saying that funds that invest in illiquid assets are built on a lie. And I think he was testifying to MPs in June about the Woodford Fund, I would say. And so how many other Woodford funds are out there that are putting money into illiquid assets? And the reason he says that in the article or in the testimony is that these funds are marking these illiquid assets to market every day. And he says that's a lie, because you can't trade these illiquid assets every day. So that's why he's saying it's built on a lie, right? And you've got the general public putting their money into it. You've got pension funds that are running people's money, like Maidstone, whose money was frozen with the Woodford Fund. You've got people like that have no clue, who are putting people's money into these funds that have illiquid assets. So yeah, look after your own money. I know some people have to put when they get paid, some of that money goes into their retirement accounts here in the UK or in the US, where whatever it's called. Australia, they call it superannuation. US is 401k. In the UK, it's a SIP, or it's a private pension. Maybe try to pare down on how much money you put in there. Maybe try to put it into physical gold. See if you can do that and get out of the system, because I'm sorry, I think this balloon is is getting bigger and bigger, and it's gonna pop, out of the blue, as we know. What else is going on? The yield curve, even the FT is saying today, U.S. yield curve is still inverted, still worrying investors. So they're saying the same thing that I'm saying. It says here, sliding long-term interest rates suggest economic weakness is approaching, and the yield on the 10-year Treasury bond has fallen sharply below that on the 3-month government debt. The gap between the two is closely watched by investors and policymakers at 26 basis points. On Wednesday, it is back close to its most negative level of the year. So it's just what I told you like a few minutes ago. But do you think Joe Public out there, whose money is going into a pension fund, into the stock market, is he worried about that? No. What he's been told by CNBC or the New York Times or Bloomberg is that the stock market is at all-time highs and everything is great, right? So be careful out there, I would say. So just to finish off, let's see where things are this morning. I know the markets are not going to open the US today, but they are trading. It's 8:08 a.m. London. We've got spot gold 14.13. It's down about 5. Silver is down about 6 cents at 15.23. The Dow is down 35 points, so nominally down. S&P is down 3. NASDAQ 100 futures unchanged. We've got sterling up 10 pips against the dollar, or 0.1%, 125.83. The euro is up slightly against the dollar as well, 112.81. So yeah, the Japanese yen and the yuan are pretty much unchanged as well. WTI is down 63 cents or 1% at 56.68. Brent crude is down 70 cents or 1% as well at $63. In my opinion, central bankers pose the greatest threat to the general welfare of the public, and they're acting very irresponsibly. They're taking a party balloon and blowing it and blowing it and blowing it as big as possible, and it's gonna be worse than when you do it at a party. At a party, it startles you, it scares people, but it's temporary. In this case, they're playing, they're playing with the general welfare of the general public, and it's going to hurt well, hundreds of millions, if not billions of people. They're you know, the irresponsible way in which they're acting, and don't be distracted by comments by these people that it's the trade disputes that's slowing down the economy. No, it's the central bankers who have been in charge for too long and manipulate everything so much. They're the ones to blame when the bubble pops. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, and you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great 4th of July in the States and a great day for everyone else elsewhere. Take care. Bye.